Well, hello everybody. This is Paul doing a quick update. Um, so I wanted to go over some, mm, I would say, relatively major changes since the last time I checked in with everybody. Um, and it's mostly in response to the Wuhan situation creating opportunities in the stock market as I see it. Um, so this is my current spreadsheet. Um, Here's how I'm set up. As you'll notice, the REIT section's lower, utility section's all of a sudden higher, consumer cyclicals all of a sudden higher. So let me give you a general idea of what's going on. If I go over here, so I have a watch list, and what I've been putting on my watch list is just the different stocks because I watch all the different dividend channels, but some of the stocks they recommend that I consider expensive, just going by PE ratios and whatnot. So since December, I've kind of been waiting for some of these stocks to come in on price. And previously, if you watched my previous video, you would notice that I mentioned Disney. And I said if Disney drops down to 140, it is a guaranteed buy. And the reason why is just because it's an extremely quality company, and you would have to be crazy to think that because the what's affecting Disney right now, if you look at this right here, this is coronavirus. They haven't announced earnings. They haven't said anything. They haven't even come out with their Disney Plus numbers yet. This is just flat out coronavirus right here. Took it from 145 down to 135. If you assume that the coronavirus is never going to get cured, I guess that's a good investing thesis. Um, it's not my investing thesis. Let's put it like that. So I'm assuming that someday the coronavirus is going to get cured. And I'm well aware that when Disney announces earnings, they're going to say that they've topped expectations on the number of people signing up for Disney Plus. There's a few things that would need to really go wrong, like Disney Shanghai would never open again. Um, Disney Plus bombs, which is just not something we're seeing, or not something I'm seeing. So last time that you saw me, I owned 0.00153 shares of Disney, and now I'm up to 27. Um, Something else that was another stock that I was watching is 3M. And the reason I'm watching 3M is just because they're a very solid dividend company. They reported earnings. They missed on some of their sectors, but they're a conglomerate and they own a healthcare sector. And I don't know if you know seen any pictures coming out of China lately, but they all have the little 3M logo on the front of their mask. So I'm using this as an opportunity to pick up 3M, and I'm not just using it because there's 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 math that's actually going into this to figure out what's going on. Also, something else is the huge investment that I had made in the O has paid off multiple times over at this point. It seems like because this thing's just ripping and running. After the ex-dividend date, this is the date you got to be in by to get paid. I expect this to actually drop off. Um, this 78 right here might drop that down to 72, or not 72, but maybe 76 or so, or 75, which would knock this number down pretty large. Um, I definitely wanted to reduce my concentration to REITs. I didn't think I would get the opportunity so quick. um, and this Corona thing has given me a lot of opportunity to jump into some very, very quality stocks that I didn't think I was going to get the opportunity to jump into for a very long time. Um, Another place that I wanted to jump into was more bond proxies, not actual bonds, but I wanted to jump into utilities. As I see rates coming down, the current investment thesis is basically, and now also buffered by the coronavirus situation. If that China slows down, central banks around the world are going to have to respond, which means our central bank would have to respond also, because that would affect our economy directly. So you would see rates drop automatically. Utilities are going to outperform Also, there's a few utilities I've been looking at, specifically Duke. This is an ESG play. Also, they've been getting into solar, and wanted to reward them for that. So I bought 12 shares of that. Um, the money for this is coming off the top of O. Um, O has just been on an amazing run. It's incredible how fast the stock has been running. I believe it's going to have to come in at some point, but I'm definitely going to keep at least 100 shares in it and then increase my, just let it go from there. This will probably be the last time I sell O. I would prefer that the portfolio weight, and I can show you. Where is it at? So I would prefer that my portfolio weight for O be closer to 10%. It was at almost 35% of my portfolio. So if there was like a 10-cent move in O, it was moving my entire portfolio, even if every single other thing in my portfolio was positive. So the money that I've pulled out of O, I've put into some specific places like Travelers. I've bought more into Coke. I bought Duke. J&J, I've without a doubt picked up a lot of shares of that because that's just a healthcare play. J&J has been rallying ever since this Wuhan thing came out, and I've been wanting to jump back into J&J for a while. And when I saw it dip down to 148, or when I saw it at a price that I thought was pretty reasonable, I jumped in without a doubt. This is a long-term hold right here, without a doubt. Southern Company, I jumped in. That's SO. Ever since I jumped into Southern Company on the 22nd, and I'm already up on these shares alone right here, almost 3.5%. So what I wanted to also show you is just basically how my performance has been going versus the market. So if I take S&P, Dow Jones, you can see currently I'm beating the market. This would be significantly higher right now, but I've been buying Disney on the way down, and I also loaded up on 3M shares. So I would probably be closer to 3 or 4% right now. But the only thing dragging down my portfolio, which is kind of funny if you watch any of the dividend investor guys, is the thing that's actually dragging down my portfolio right now is the IBM shares that I picked up. I picked this up after earnings, and this one's jumping around. Yesterday, Disney and IBM spiked as soon as there was any good news that came out of this corona situation. So Disney for me is a very obvious buy right now. If I was going to sell more O, if I wanted to do that, it would go straight into Disney. But if you look at Disney now, Disney's at 9% of my portfolio. I'm not gonna. I would prefer it to stay underneath 10%. So I'm gonna let Disney do what Disney's gonna do. But I have a feeling that once they do their earnings call and once there's any good news coming out of this Shanghai situation, that you're gonna see Disney pop up pretty high. So the only bad thing I have in my portfolio right now, or something I think is not going to pay off in the short term, is probably this regional bank play right here that I have, the KRE. That's just because rates are tanking effectively. If I go back over here, go to CNBC, and market's been jumping around all day. But you can see rates are just, here's the rates right here. 10 years at 1.592, 3 month is at 1.556. This is the one that the Fed watches. There was a 38 in November after they did all that craziness with the repo markets and before all this China stuff happened. This was the spread on these two was 38 basis points. This was in the upper 1.75 range, or actually 1.8 range. And if these two invert, this is the one that the Fed watches. This is what this inverted last May, and it stayed inverted all the way up until, this is the red herring. Everybody watches the 2 and the 10, but the Fed specifically watches this one. So if you see this 10-year go below this 3 month, if you get any more Wuhan news, especially if you see the World Health Organization come out tomorrow and say something about, public health crisis, that type of thing, you could easily see this drop because money is going to come out of China. Right here, see the Hang Seng? Money is going to come out of China, and you're going to see a lot of money just pile right into the 10-year. Um, One thing I wish I had bought, now that I think about it, is I have these two on my watch list all the time, and I pointed this out last time. And if you bought into these last time when you were, and I've been putting on Twitter also, if you see zeros, so zeros is basically it's basically an ETF for treasuries. So this is a 25-year, and then TLT. This is the one everybody loves, 20 plus year treasury right here, and then BND is the BND is basically the 10-year. Um, so you see, I added these. Where's the data? So the data added these. I added both of these on the same day. So I added these on the 16th. So if you bought into these, I hope you enjoy your 6% return. Um, it's definitely it's basically a hedge. It's there. It's not being used as an inflation hedge. It's being used as basically a safety hedge right now. So if you're trying to figure out where everybody's piling their money into right now, I would say the zeros, TLT, BND, um, international is getting sold off pretty heavily right now. Actually, if you notice, if I go to my chart, you don't see international here at all. That's because I sold out of BNDX and I also sold out of VYMI. Not because they're bad stocks, just because they have international exposure. And the international exposure they have is to the Asian area. So if you see this corona situation, because those economies around China are tied to China. So if you see China actually slow down, and China will slow down since they are flat out locking down cities right now, you're going to see all the economies around them come in. So like you're going to see them just basically, their growth compress. So if I go to VYMI, put it in right there. Am I putting this wrong? There it is. Just so I can show you what it's been doing. This is good old E-Trade. If you look at what it's been doing, and you basically see this huge dip. So basically, it was going up because going into year end, everybody starts talking about how international is going to outperform the U.S. someday. So it got up to 64 on January 2nd. So you might have been, oh yeah, it's going to keep going up. And then all of a sudden, it's down to 62.38 right now. So dividend yield is nice. It's quarterly, true. But international is going to continue to take a hit, especially as you see more airlines come out and say, we're cutting back travel, we're completely cutting back travel. And I think until you see the word vaccine, I'm avoiding international until I see the word vaccine or some type of real treatment that, something coming out of China that proves that this is really contained. As soon as that happens, Disney, a few of these are just going to rebound because because you have to think right now, because basically the Chinese people are they're isolated. So when they come out of their houses, they're going to go into a spending mode. It's just how these things work. It's kind of like a rubber band, because they're not spending their money right now. So you have to think, so the money is just getting saved up. It's probably in a bank or whatever they have going on over there. And when they get out of this situation, which I believe they will, I hope they do, because if not, that's going to be our problem. But, once they get out of this situation, it's going to snap back like a rubber band. That's kind of what happened in SARS. They saw a drop, and then they saw a huge rebound. And that's kind of how these things work. But that's kind of one thing that also happened during the Great Depression. Nobody was spending money, so that's kind of what grinded the economy to a halt. Nobody trusted the banks, so everybody kept their money. So once everybody was given the clear, you saw this money just come out of what seemed like nowhere, and it just got rushed into the banks. And you kind of saw the economy. It took a lot of years, but the better comparison is what happened with SARS. They saw this huge drop as everybody was quarantined, as they finally listened to the world community, and then all of a sudden you saw just this huge rally. And we kind of saw a taste of what that was going to be like yesterday because Disney rallied basically by $2.38 yesterday. So if you see good news come out of China, you just gonna kind of know what's going on. A few future moves that I'm making. Um, so right now my portfolio is 71.29. I just moved 200 over, so you can't see it right now, but it's because I put it in the order. But I just moved 200 over um, to to uh, to my account here, and I'm gonna actually invest that into this municipal bond right here. This is the high yield municipal bond. Um, the reason why is because between now and April, because if you just watch the Fed press conference, they said the repo situation or the repo markets are stabilized and they're going to continue operations up till April, which is coincidentally right around the exact same time that the US government needs a lot of money. Um, I'm going to shift back more towards 60/40. And another reason I'm doing that is because moving this money into stocks out of where I had it, this because O is a monthly payer, so moving my money out of O into different stocks, it's thrown off my curve here. If you look now, every 3 months I'm getting close to $180 a month, or $180 every 3 months. As you can see, monthly is right around 88.79. I want to bump this monthly up. So the way that I'm going to do that is throw it into municipals. This will also help me uh, just basically increase my portfolio without increasing my tax liabilities. Um, and it also gives me a safe place to go because while you see the market up, so you see the market up today, um, driven by just these different stocks and whatnot. Um, Something else that I've seen is if you go into any of these municipal bonds, these municipal bonds are doing something I haven't seen them do in quite a while, or I've never seen them do. So if I go to the 1 month for any of these municipal bonds, you could do this for any municipal bond. Um, they started the month so this one, for example, started the month at 1644, for example, and now it's sitting at 1665 or 1666. So this has been a safety trade also. I plan on holding these anyways, and I'm well aware that they're going to go down once you get good news. But the good news that might come out of China could be offset by people who overreact to the Fed tapering the repo. So right around the exact same time, maybe February, March, that you might hear really good news coming out of China, hopefully, is it like a vaccine or whatever? Or maybe it's like truly contained, look for that word. You might see people start to overreact or position for safety prior to the Fed repo. Because the last time that the Fed kind of pumped this much money into the market and then said they were pulling the money, that was when they were buying the short and the long end. Now they're only buying the short end, but like once the Fed pulls out of the market, if they ever do, you're going to see a lot of people fly into probably safety. So like municipals, bonds, that kind of thing. TLT, zeros, without a doubt, it's going to see a bunch of people flying into it. Um, so it's going to be kind of volatile. It's definitely going to be volatile, and it's all caused by the Fed just throwing darts at a dartboard to keep this economy rolling along, and we'll see how long that lasts. But as it stands right now, so let me show you where I'm at right now. Just today, down 100. It is all caused by Disney and 3M. I'm not panicking about it whatsoever. It looks like a lot. It's actually, where is it at? And the market's kind of tanking going into the end of the day here. But you see, down 0.26. Not really stressing out. Um, that's just because everybody's going into safety right now. So you have the Wuhan situation, plus you have Powell basically saying that repo is going to end some days, so people don't know what to do. But yeah, so that's how I'm positioned. Just going into the next week and the month after. I don't see myself moving any positions. I'm very comfortable. If anything, I created this calculator over here, and what it does is you take the stock price, you take the dividend, so this is the monthly or the quarterly or the monthly dividend, and then you take the yearly dividend right here. And what this does is all this does is it just takes, like, so say if you take $1,000 right here, so say if I change this to 2,000, you see the numbers change. So this lets me know at that price. So if I'm thinking about selling one stock to buy another stock, am I going to take a dividend hit? Am I going to see my dividend increase? So what this does is it specifically looks at O, where I was deciding, do I want to move money in here? Do I want to move money out? And it looks at O specifically, and it says if, and it looks at whatever the price was. So, and this just lets me know, okay, if you took $1,000, put it in the Duke versus putting it in the O, what happens? How many shares would I be able to get for one? So E-Trade doesn't let me do fractional shares, so I would have to do, say, 10, for example. But O would let me get 12 or 12 shares. But this lets me know offhand, give or take a little, how much, what's my hit. If I sold, because effectively that's what I would be doing. I'd be selling 12 shares of this to be able to buy 10 shares of that. But if you notice the yearly dividend, you see the dividend change? So I would be able to take capital gains from selling O. This is specifically what I've been doing. I would take short-term capital gains, because that's exactly what this is, because I have not held the stock for a year, right? So I would be taking short-term capital gains, the difference between what I bought it at versus what I sold it at. And then also, I would be taking a dividend increase, if that makes any sense. So, also, if you compare this to my last video specifically, I did have a lot more in REITs, for example. And so moving into things like Disney, which is a bi-yearly payer. So let me show you Disney here. So if you look at my dividend yield, this is a good lesson on dividend yields too, by the way. So you see how Disney's at a 1.27. Travelers, for example, is at a 2.44. J&J 2.54. These are the ones that you always see on anybody's dividend channel. So my dividend percent, this guy right here, went down from 4.5 to 3.5, moving the stocks around the way I did. Getting rid of my international exposure, reducing my O exposure, or specifically my REIT exposure for the moment, and then moving into what is considered by pretty much anybody you talk to as very, very quality companies that are being sold at what I consider a very big discount right now. I consider these to be at a massive discount. So I'm expecting pretty much any good news out of China to have a pretty significant rebound on some of these stocks. I could easily see, just in the time that I've been clicking around the screens, if you had bought Disney at 135.98, it's already up to 136.13. If you buy enough of it at that price, that's a pretty nice positive. So you're getting quality stocks, and Disney keeps bouncing. By the way, if you're watching Disney, it once it gets to that 135.98 point, it bounces right off of that. So even with the Shanghai news, I guess getting priced in short term, which is exactly what this is. This is a short term pricing in of information. It's bouncing off of those low levels. So yeah. So Disney is this low on the 7th. I'll be able to add more money to it also. So we'll see how that goes. We'll watch it between now and then. Today's probably going to end up being a down day for me. I don't know. The market acts really, really weird at the end of the day. But we'll see how it goes. But if you just look at where my two biggest losses from the day are, which is kind of funny, if you just kind of do a day gain or day's gain, if you subtract out the three companies that everybody considers solid dividend names, I would be up a significant amount. If this was 0, 0, 0, I'd be up whatever this adds up to be. Um, so there you go. But definitely wanted to give you guys an update, let y'all know how I'm doing. Let me know if you have any questions, and everybody have a nice day. Thank you.